Meantime, let's bring in our friend Don Peebles. He's the chairman and CEO of Peebles Corporation. You may remember, if you were watching yesterday, he was the only member of our mock Fed panel to vote for a cut in interest rates. Don, welcome back. Good to have you with us. Explain your reasoning once again for those who weren't here with us yesterday, why you thought a cut was appropriate. I thought it was a very interesting point of view, and just basically your reaction to what you sense the Fed has done and said here.
Well, first of all, the reaction is no surprise, but growing disappointment. The reason I think they should have reduced rates is what's happening to the banking system right now. If you look at local and regional banks, they have over 80% of the exposure to commercial real estate loans. Office buildings are in a free fall in major cities around the country, Washington, D.C., New York City, and Chicago, and so on. And so those two things are threatening the banking industry, and you add the interest rates to commercial real estate borrowers has more than doubled in the last 2.5 years. It puts such a strong level of stress on these banks, and it also freezes capital where the banks are not able to make loans that they should make to small businesses and individuals. And of course, they're calling in and pulling back credit on both of those sectors as well.
So I'm hearing you say, if I'm understanding correctly, that there is a big day of reckoning coming for small and mid-sized banks because of their exposure to commercial real estate, presumably to some commercial real estate companies. I don't know whether you would include your own in there. I hope not. But that there is a day of reckoning coming and that the Fed is missing it, swinging and missing it.
Yes, what I'm saying is that their treatment or their cure is going to kill the patient in some regards because, again, there's a big day of reckoning coming. And in fact, the FDIC issued a report about 2 weeks ago indicating that over 600 banks would be insolvent, local and regional banks, if they had to mark their commercial real estate portfolios down to market. And those properties are not going to recover anytime soon because these high cost of interest rates are strangling businesses in the economy that relies on debt. And then, of course, the consumer is getting hit hard because the cost of housing is doubled because of interest rates, and the cost to buy or lease a car has doubled. And so those are big purchases for consumers, and that we're going to see the effect of that. I mean, consumers have $1.8 trillion of COVID relief money, and that stimulus money is now run out. And now we're beginning to see things settling down. And frankly, the rate increases were way too extreme and too rapid to begin with.
So, and also we pointed out earlier that the cost of insuring a car, let alone, apart from the cost of buying a car, has risen by 23% over the past year. It's just gotten really difficult. I am sure there are people, and I ask this with affection and respect, who would say, well, of course Don Peebles, a real estate guy, would like to see interest rates lower. Of course, Don Peebles, a real estate guy, would point to a looming crisis that originates in commercial real estate and is going to infect the banks with which he may, in fact, do business. How would you answer those folks?
Well, the real estate industry and construction industry is one of the largest employers in most states in the United States. And most urban centers rely heavily on real estate to produce tax revenue, to produce jobs and economic growth and activity, and to provide housing to attract more people to come there. And so the real estate industry has a major impact on the economy, and of course they have a major impact on local and regional banks because they're one of the largest borrowers. And so we have to look at the industry and its impact on the economy. And by the way, again, automobile industry, housing industry, insurance industries, small businesses, everyone's affected by these rapid increases in interest. And yesterday, there was one of the panelists spoke about how high interest rates benefit public employee pension systems. Well, most of them have major exposure to commercial real estate and have seen their investments plummet. So they're hit hard by this, too. And so the average worker is going to be affected.
Great point.